Okay, well, thank you everybody for joining. Those of you that are live or that will be participating when the webinar recording comes out. I'm Jeff Stewart with my partner and co-host for tonight, Brock Mogensen. This is the second part of a three-part series, what we're calling the Capital Club Syndication Series. We're going to start doing these more often, and we're working to also create sort of a mastermind program where, community type thing where we can get together. I think I was talking about a little bit earlier for those of you that were on earlier, to be able to get together and help each other either partner on deals, either as a GP or LP. So we're noodling through that idea, and we'll have more to that later on in the deck. But basically, this syndication series, we're just kind of trying to do a three-part series. What is real estate syndication? How do you find deals? And how do you raise capital? There's a lot of different aspects, and you can really go really deep in the weeds on each of these. But for these, these kind of public, webinar series that we're doing, we're just going to kind of go high level, and then, we'll go more deep into the weeds in a later, community setting. But tonight we're doing how to find deals. Brock, you want to go to the next slide here?
Yeah.
Just by way of introduction, we've been doing this for a while. I'm not going to read off any of the slides in general. That's just not my style. But I've been investing in real estate for 7 or 8 years now. I've come full cycle on a number of properties, smaller properties. Have worked my way up through fix and flips and duplexes, and then we moved into bigger apartment buildings when we started raising capital from investor partners. And we've done deals across a number of different asset classes now: office, retail, industrial, self-storage, and closing on another deal next week, an industrial triple net lease deal. So we're excited about that. Brock, do you want to introduce yourself? Or
Yeah, I think Jeff covered the company background. I mean, we partnered up a few years ago with our third partner as well, and we've been doing these syndication deals. I think we're on our 8th one now. So it's we've learned a lot. I mean, continuing to do larger deals in different asset classes, and we've learned a lot about the whole structure of syndication. It's an awesome way for the general partner side to scale quicker, and for the limited partner side to invest in these deals. This is truly passive. So just ultimately putting this together to get the word out about syndication. I know it's, I hear more and more about it every month. I feel like it's definitely not new, but just trying to educate people on how it works and the ways to get into it.
this is our current portfolio. We initially started, and we were going to be a multifamily, syndicator, multifamily, real estate private equity firm. And then we just decided, we're going to branch off, and we're going to be opportunistic and look for value add opportunities, across numerous asset classes. Now, I say that, and we went a little bit too wide. Probably you're going to, rein it in a little bit. We're not, as an example, right? We bought the office building in the bottom right corner there. We bought that, a month before COVID hit. So that one, that's not really an asset class we're going to be looking at anymore. There's also some smaller deals in here that we realized, smaller deals really take as much time as bigger deals, and our bigger deals yield a lot more of the investment returns. And so it's not worth our time to work on some of the smaller deals. If you see in the left corner, we've got a couple deals that aren't very big. But we're scaling up. Our most recent acquisition is a mixed use property in Walker's Point in Milwaukee area, a couple blocks from a condo that I have as well. We love the area. We're going to try to buy more in that area. And it's been just a phenomenal deal for us so far. And we're, like I said, next week we're going to be adding another big one to this slide. So That's what we have. We each have a personal portfolio that has, yeah, more property than this, but this is kind of the building blocks and foundation of our private equity firm. And we're looking into ideas about starting a fund. So, more to come on that. We might do a webinar on that because we're trying to learn more of the fund, the fund model where you buy more assets and put it into a fund rather than just syndicating deal by deal. But Brock, want to go to the next one?
Yeah. So Jeff kind of ran those that watched the previous one. Jeff kind of manned that one. I'm going to go through most of this one. So really the topic, and I'm not going to really, read through these and go super slow. We're going to kind of run through these topics. But ultimately, the best source of commercial deals is going to be brokers. I mean, that's really where it's an obvious one, but I think a lot of times people, and there's really two avenues to find deals, right? You go direct to owner or you go through broker agents. Those are the main two avenues to find deals. And what we found is after trying and different things is the direct to owner marketing campaigns, right? So that can be cold calling, direct mail, all of the above works, right? It works in the space, but it's really hard to do in the larger multifamily. When I say larger multifamily, I'm talking 50 plus unit size. I think ultimately the direct to owner marketing works a lot better in the smaller multifamily, 10 units and lower, maybe up to 20 units. It works better in that space and you have more luck. But once you get into this 50 plus unit space, first off, finding the data is very, very hard because almost all of these properties are going to be registered under an LLC. So you have to first try to find the address of the person that's registered to this LLC. Usually that address is like an attorney's office or the title's office or property management office. So it's really hard to find good data. Phone numbers usually aren't going to be this person's direct cell phone number. So that's really ultimately the hardest part. And then when you finally get one of these people on the phone, they're not, you can get lucky and find that 1 in a million, but most of the time they're sophisticated investors. If they're buying 50 plus unit properties, they're not dumb, and they know they're going to get more money by going through a broker. They know what their property's worth. They're not going to cut you this amazing deal. So we literally spent probably 15 grand on a direct to owner marketing campaign, paid for all the data, hired a VA, did everything legit, sent out letters. And I think it led to like 4 or 5 phone calls with these owners. And they pretty much all said the same thing. Like, yeah, I'll sell, but you probably don't even want to know the price I'm going to sell it for because you're not going to be able to make sense of the number. And that was really where all 15 grand later, hundreds of hours later, that's where we got with these direct owner marketing campaigns. And that was targeting 50 plus unit apartment buildings across the entire state. So that really, our conclusion from that was just time is better spent building relationships with brokers. You're going to see more quality deals and more deals overall by putting time into just building broker relationships. But again, do both, try it out, see if it works for you. I know people that are finding deals doing those direct owner marketing campaigns, but that was just our conclusion of trying different avenues. So really what most of what I'm going to talk through here is just strategies I've learned for building relationships with brokers, especially starting out, what you can do to really get those relationships going. So this is kind of a term I put together here of the breaking into the brokers top 5. So you got Tom down there from MySpace. You guys remember setting your top 5 on MySpace on your profile. It was your top 5 favorite people, right? Top 5 favorite friends, whatever it is. But really how I tie that into here is you want to be in the broker's top 5 list of buyers. So let's kind of go through the story of how it happens, right? So a broker gets in contact with someone that's willing to sell, whatever size property they're ready to sell, right? So the broker gets the listing contract. They're officially going to list. Most times the broker isn't going to go, in the larger multifamily space, the broker doesn't just directly go to LoopNet and the MLS and list it like a residential agent might do. The broker is going to go through their list of their top buyers and send it out to them in order, generally, of maybe they send it all at once. Maybe they call the first person on their list and kind of work their way down, because they know if they can just quick and easy, they can find a buyer that's quick and easy to deal with. It's much easier for the broker. It's a much easier transaction. So the brokers are going to start at the top of their list. Generally, it starts with people that have closed deals with them before. and they're going to work their way down, right? They might call the first few people and say, hey, I'll send you over this deal, check it out. But ultimately, the goal is you want to get on that top of their lists. You're going to see these deals first, generally get the first look at it, be able to get the best price on it. The further you are down their list, and usually when you start off, you're going to be just on their email list. And there's some brokers that there's probably 5,000 people on their list, and you're one of 5,000. Good luck trying to get a good price on a deal doing that. But if you can get in there, top 5, top 10, whatever number you want to use, you're going to get a much better look at these deals. So that's when you're thinking through these strategies and building relationships with brokers. Ultimately, just that's the way I look at it. Is I'm trying to work my way into their top 5, and you're not going to be able to get there with every broker, right? I mean, I don't know. We probably have maybe two or three brokers where we're in their top 5 list. One broker specifically, we're working on our 3rd deal with him right now, and I'd like to think we're number 1 on his list. So that's really what it is. I mean, that's the strategy I look to do. Yeah, I mean, ultimately it's, you want them calling you first. All right. Feel free to throw anything. And if I'm going through this, Jeff, if you have any ideas.
No, I love the top 5 concept. I mean, as far as developing deal criteria, this is something I think we could have done a little bit better. Right. Like I said, we're always learning. We've got a portfolio that's performing really well for the most part, right? Like we've got an office building that's struggling a little bit. And I don't think we're the only ones there, but I think, getting really granular about what your niche is good. And, being able to develop this, criteria that your buy box, they call it, right? Is if something falls into my buy box, right? You got to prove that you're a closer and that you can perform, or the broker's not going to trust you. The market's not going to trust you to be able to come through and buy. And we've gotten a lot of deals from, I think this is our 4th deal with the same broker, the one that we're going to close next week. And, he's just, now we're getting to a point where he feeds us deals before, we're like probably top 1 or 2 of his. And we're easy to work with. We're fun. We like to go out and have drinks afterwards and that kind of thing. So I think that stuff goes a long way, just being a good person, being a good group to work with. And then knowing that, hey, if this is going to fit into your deal criteria, your buy box, you're going to pull the trigger and move forward on that. I think, at first we were like, okay, this is what's in our buy box. And then we're a little bit over here and we kind of grew it a little bit. And now we're just trying to really hone in on that. I would tell everybody to get super granular with their criteria.
Yeah, no, totally. I think, and it's going to change, right? You're going to pivot throughout your career. It's not like you're going to set this deal criteria and say, all right, this is it, for the rest of my career. It's going to change every couple months, every year. I mean, you're going to decide, hey, let's change this. I'd rather do this sort of deal now. But like Jeff said, I mean, it's super important to sit down and write down like, what is your deal criteria? Because when you start talking to brokers, one of the first questions they ask is what kind of deal you're looking for. And if you're just like, yeah, I mean, something around here and this, I mean, the more granular you can be, if you can sit down and say, this area, this part of town, this size, this asset class, this age of property, whatever it is, listing out as granular as you can, the broker's going to take you more seriously. And when they find a deal that checks those boxes, you're going to come to mind and they're going to send it to you before they send it out to their big list. So that's kind of something, I mean, we're getting better at is really getting more granular on these criterias. And I think everyone should, but really, I mean, define this criteria and constantly tell the broker what this criteria is. I mean, every time you follow up with them, every time you talk with them, just keep reminding them, hey, this is what I'm looking for. This is the deal I'm looking for. And when I send up follow-up emails to our broker list, usually once a month, I usually have bullet points in there like, hey, just a reminder, is this the type of deal we're looking for? A, B class apartments or whatever it is in that email. So they know each time, because they're going to forget. I mean, right now, brokers, they have all the power. I mean, they have tons of buyers hitting them up. I mean, you want to set yourself apart and really show them that you're a professional and you know what you're doing. Okay, so this is a process I put together that I loosely did when I started, but critiqued it to be a little bit more step by step on how to start off building your broker list. So when you're getting going, you're trying to build out your brokers. Who should I call? There's hundreds of brokers in any given market generally. I mean, which ones do you start with? So this is kind of the process I followed to initially build up my list. So go to LoopNet, you enter the market you're looking for deals in, and some deals are going to pop up generally. Maybe it's not exactly your criteria, but there'll be some deals that pop up in most markets generally. You're going to kind of run through that list, click on a deal. I like to go through and then underwrite the deal. Generally in LoopNet, they'll have some financial or some property information in there. Maybe you underwrite it quickly. Decide maybe you actually like the deal, but generally if it's on LoopNet, you're not gonna love the deal right away. But make some notes of what you like about the deal, what you don't like about the deal, and then in that page you'll see the broker's phone number and email. Email them, call them. I prefer just you get on the phone and call them and make it quicker. Give them a call and just say, hey, I saw your deal on LoopNet. I just wanted to reach out. I'm looking. I'm in the area trying to buy deals. This is what I liked about the deal. This is what I didn't like about the deal. And maybe you ask for more information on the deal, or maybe you're just, this is a good way to intro the call with the person. Next, I mean, I'd usually like to, if it's a broker I actually want to build a relationship with, and I think it's going to be a good relationship, I like to meet the broker in person. So I'll tell them, hey, maybe on that call, you're like, can we grab coffee sometime? Could we grab lunch sometime? Just want to kind of talk to you more about what I'm looking for and get to know you more and see if we can do a deal together. Most of the time they're gonna take you up on that. So you go out with them, and when you're going into this meeting, like we were saying, that criteria, that the buy box, I mean, have that handy, maybe even print it out and have it on a piece of paper, and have a little packet to give the broker to show your credentials. But have all that information at least in your head when you're going into this meeting, because that's what they're going to ask. And it really, I mean, in the current market we're in, you're sitting down with this broker, they're interviewing you. I mean, you have to sell this broker on why you can close a deal. They're not, it could be, maybe it'll change 5 years from now and it's gonna be the other way around. But in today's market, the broker's sitting down and ultimately just diagnosing, okay, if I send this guy or girl a deal, I mean, are they gonna close? That's all that's going through the broker's mind. Like, they don't care about anything else. They just want to know, if I put the time in, is this person going to close the deal? Am I going to get my commission check? That's the way you have to think about it from their end. I mean, that's why they're doing the work, right? So going into that meeting with that mindset of, okay, I'm selling this broker on why I can close and why they should send me this deal. That's the mindset you need to have. And again, after that meeting, so, I mean, you're going to stay in touch with the broker. That's huge. I see a lot of people that they'll do this initial call. Maybe they meet with the broker and then they just think, okay, I'm on, I'm good now. Let's see what they send me. No, I mean, they probably had 15 of those meetings this week and they're not going to remember you next week. So stay in touch with them, however you want to do that. For me, it's just a simple email each month. Sometimes I'll just call them and touch base every once in a while, but come up with a system for staying in touch with these brokers. Put it on your calendar, whatever you want to do to remind yourself that you got to follow up with them, stay in touch with them. And every time you follow up with them, I mean, do some standard, like put in there, like, some standard rapport building stuff is always great. At the end of the day, it's a relationship. You just got to nurture it and build it. But I always like to make sure, like I said before, every time you follow up with them, whether it's an email or call, include a reminder of what deal criteria you're looking for. So they remember, this person's looking for this deal in this area. So when I get that deal, they think of you first. That's been really important. It's won us some deals before. Another quick tip on there is the always reply. So I see a lot of people that do this and it's easy to do. It's really easy to do is if you get an email from a broker, even if it's, your number on a list and it's getting sent out to a bunch of people and a broker sends you a deal and you don't like the deal and you're going to pass on it. Don't just click delete and move on, because you want to distinguish yourself. So always reply to the email. If you don't like the deal, send a reply back and say why this deal doesn't work, right? There's another chance to include your deal criteria. Maybe the deal is too small. It's a 15 unit. You say, hey, sorry, deal's a little too small for what I'm looking for. Again, just want to send you a reminder of the deals I'm looking for. Include that again. Don't just delete the email and move on, because then they don't remember you. This is a chance to get in front of that broker again. Reply to the email, let them know, hey, that also shows them this person's serious. they're not just wasting my time. I mean, they're actually truly looking for a deal because I see they took the time to reply to the email, right? It's pretty common sense, but I see it all the time where people just, they're complaining about not seeing these good deals from brokers, but they're not doing these tactics to really stay in front of the broker. Okay, so here's some objections that you might hear, especially getting started. It's tough when if you're trying to break into this commercial space, especially if you don't have much experience, and you're just trying to scale quicker and get into this. It's going to be hard. I mean, if you have a whole bunch of experience already and you start at your broker, building list, it's going to be much easier because you can leverage your experience. But if you don't have much experience, here's kind of some of the stuff I heard. I mean, when I was getting started building these relationships, I owned a duplex. That was it. Didn't have much experience to really show off. So, some pretty basic here. I mean, they might ask you what your experience is, what kind of deals have you done? And you just think of ways to respond to questions like these. I mean, they're going to come up when you're starting these calls and meetings with brokers. If you have some experience, great. I mean, you can say, hey, yeah, I've done this deal. I've bought a duplex and now I'm looking to take that experience and get into, these deals now. Or what is your experience? Hey, I don't have much, but I'm partnering with this person who does have a whole bunch of experience. Here's their experience and what they've done. This is my partner on the deal. Stuff like that is gonna make them, much more confident in working with you. Proof of funds. I mean, this is when you're first starting out. I mean, now that I don't really ever hear this from brokers asking this, but when you're first starting out and you they look at you like, how's this person going to come up with $1 million? That you're going to hear it. They might ask, do you have proof of funds? That's common in the residential space. You don't really see it too often in the commercial space, just when you're getting started. But maybe you're looking to raise capital for investment. Maybe you have all the money in your bank account. Good. That's easy. Just show them a snapshot of your bank account. That'll be a really easy way to get it going. But maybe you don't. Maybe you're raising capital from investors. If you're syndicating the deal, that's going to be the strategy. You're not going to have the money in a bank account if you're syndicating. So just explain to them what you're doing. I mean, just be transparent about it. Yeah, I'm raising money from investors. I have 10 investors that are already soft committed for this amount. So I feel confident I can raise the money. I mean, just sell them on why you're going to be able to raise the money when the time comes. Bank approvals. I mean, same thing. Banks aren't going to pre-approve you like they do on residential. That's just not how it works in commercial. It's going to be deal by deal. So, and you want to build relationships. That's a whole other topic, but you want to build relationships with banks early on before you really start truly trying to buy deals. And just talk about that. Say, hey, yeah, I've talked to 2 or 3 local banks. They both have good relationships with them. They're willing to lend me, on commercial deals that make sense, and just include information like that. And lastly, I mean, who else is on your team? Are you working with a property management company? These are questions you might get, especially if you're going out of state. If you have partners with experience, that's when I was getting going with Jeff and Adam. I mean, I was able to leverage a lot of their experience when I was talking with brokers. But yeah, I mean, just give some, if you have partners, leverage that. If you have a property management company lined up that you're going to work with, leverage that. Say, hey, I already got this relationship with the property manager. They're going to handle all this part of the deal, and that'll help also. And anything you can do to put the broker at ease that you're going to close these deals. Okay. All right. Lastly, this is the last one here. I know I'm going on a tangent here. What not to do and say to brokers. So similar. These are pretty much all things that I did when I was first starting to, I think looking back on it, I was a little premature and starting to call these brokers. I was just really, really stoked and ready to go. And I started dialing and calling these brokers and probably sounded like an idiot on the phone with a lot of them. But I mean, this first one, I mean, the broker remember you. That's what we've been talking about, right? They're not just going to remember you on your first phone call. Stay in front of them. Otherwise, you're just going to be another number on their massive list of buyers. One thing I remember specifically, I was on a phone call with the broker, and he's like, "Oh, so what are you looking to do?" And I was just like, "Yeah, I'm just looking to walk some deals. Get used to what deals look like." And it's like, I mean, if you're a broker, do you really just want to go spend your day walking around deals with someone just trying to get started? I mean, no, that's a waste of time for the broker. That was probably an instant relationship killer just by saying that. So don't say that. Asking for, so this is big here too. I mean, asking for information. I see a lot of people that do this where it's like, they're not going to, they see a deal on LoopNet or they get sent a deal. they know they're not going to buy the deal. It's too big for them to buy or whatever it might be. It's not the actual right deal. But then they ask the broker, hey, can you get a T12 and rent roll for me? And the broker, maybe it doesn't have it on hand and they got to spend 30, 40, whatever amount of time digging up this information to send to you. If you're not going to buy the deal or you're not even slightly thinking about buying it, don't waste the broker's time. Because I mean, if they do all this work to send you the deal and you just reply, hey, yeah, never mind, the deal's too small, that's not going to go over well, right? I mean, this is all basic stuff, but all stuff that I did in the beginning that I looking back on it probably, put a dent in the relationship. Fumbling on terminology when you're getting started, make sure you know the basics, know what a cap rate is, know all the standard terms that a broker is going to mention, because that's probably the easiest way to show a broker you don't know what you're talking about is if they throw a terminology out there and you don't know what they're talking about. That's going to just show them that you don't know your stuff. So learn the basics before you start this process. And, if you don't have any experience, talk about your partners again. And ultimately meeting with brokers too soon. If you're really early on in the process, I mean, I suggest, although it's good to start it, you don't want to do it too prematurely. And again, I think that's what I did. And I probably, set some of those relationships in the wrong way. You can always rebuild them, right? But I think wait till you're at a good point. You have a good education built up, and so you understand what you're doing. And you have most of your ducks in a row. If they actually send you a deal, you're going to be able to buy it. Get to that point. You don't have to wait forever. You don't want to just sit there doing nothing, but get everything kind of lined up first, I think, before you seriously start building these relationships, because you never know. You could, a week later after meeting with one of these brokers, they could send you a deal. And if you're not ready to actually move on it, it could offset the work you're putting in for it. All right. So I know I went through that semi quick 30 minutes. That was the content. So, I mean, it's really centered around the conclusion is spend time building relationships with brokers. And all it takes is one good deal from a broker, and it'll pay for your year or two of work you put in to build that relationship.
Totally agree. Just want to say thanks to everybody that joined and that's watching this either live or in a webinar recording. We're going to send out a survey. If you guys would please take a minute or two out of your day just to fill it. Or I don't even think it'd be that. Probably 30 seconds helps us get better. As I mentioned at the beginning of the call, we're starting this sort of community that we're going to put together with weekly calls. We're going to go find other experts in the business across the country and the world even that we can get on calls with us and tap their knowledge. We're going to do, Brock just put it in the chat, but so if you're interested in it, you go to capitalclub.io.com, or I mean, not .com. That's thrown me off plenty of times, but capitalclub.io. I don't know why I picked that, but there's going to be educational content on there, Brock's underwriting model and different templates, and just overall our community. So we're trying to build that up and launch that sometime in the spring or summer. So if you're interested, let us know, and we'll get in touch with you. But other than that, thanks so much. Please let us know how we did, and look forward to being in touch with you guys next week.